In this presentation, we will record factory overhead costs that are incurred. In other words, factory overhead will be going up as costs are incurred, will be going down as costs are removed from the factory overhead and applied to the work in process account as they are allocated to particular jobs. We'll do this within QuickBooks Pro, QuickBooks Desktop. Here we are in our practice problem 1, job cost tracking, work in process. We currently have the open windows open. You can open the open windows by selecting the drop down for the view drop down and the open windows list. We're now going to be opening up our trial balance by selecting the reports drop down, going to the accounting and taxes, and then scrolling on down to, or right at the top, the trial balance. We're going to change the dates up top from 01/01/20, 01/01/20 to 12/31/20, January through December. Here's our starting point. In a prior presentation, we entered factory overhead, the allocation of factory overhead to the job. Now we're going to record all those kind of costs that would go into factory overhead. Now this could be very different depending on the different types of organizations, but the general idea here is anything that we can't apply directly to the job, we're going to put into factory overhead and then use some type of estimate, some type of allocation method to allocate those costs to a job. So in other words, if we were to go back to our Excel worksheet to consider this, you'll recall last time that we applied some of our factory overhead to the work in process, leaving us with a negative asset type of account. And that's going to be the 3 components of our jobs. And remember that what we have to do here is we got the work in process supported by the jobs. Then the jobs are going to be in these 3 components. We have direct materials, labor, and overhead. If we don't, now these two, obviously the direct materials and labor, we tie directly to the job. The overhead, we have to use some type of estimate. We're going to be using here a predetermined overhead rate, and that's how we figured out how much to apply to the job. The actual overhead then is going to have to be going up to increase the factory overhead account, which will then be going down when we actually use the predetermined overhead rate. So this might not be in order. We applied it out first, and that could quite happen because a lot of times some of the stuff in factory overhead might include things like paying the rent at the end of the time period or doing depreciation and things like that. That's why typically you might have to estimate using this predetermined overhead rate in some format. So what we're going to do now is have the actual costs that are incurred, which will be increasing the factory overhead or debiting it, bringing it closer back up to 0 then. And that's what we'll do at this point in time. So let's think about that. That's going to be on 120 is going to be our next transaction. Now there's going to be multiple amounts of these. This is everything else that we're not applying directly to the job. So 120 says we have indirect labor. Something like if you're working in a basically a place, office, or some warehouse, and you have multiple jobs going on at the same time, how do you assign out like the supervisor salary that's supervising everything, or the janitorial services or something like that that's servicing the maintenance area? So those are going to be the indirect items. Again, we're not going to process payroll, but if we thought about the payroll journal entry generally in the most simplified form, debiting the payroll expense usually and crediting cash, we're still going to be crediting cash. However, the debit should be going to the job, which normally would go to work in process, but we don't know which job because we're going to have to allocate because it's indirect, and therefore we're first going to be putting it into the factory overhead. So that means that this is going to be for the amount of $14,000, debit and credit. The $14,000 is going to be going up for the factory overhead, and then the cash. So that's going to be our transaction there. Note that we don't have to do anything to the job, because the whole point of this holding account is this is not the allocation journal entry. This is the journal entry of us just accumulating this information into factory overhead for it later to be allocated to the job using some type of estimate. Let's record this in QuickBooks. It'll be fairly straightforward then to record it. We're just going to simply write a check, and we'll do the same kind of transaction. I'm going to have a vendor this time. I'm going to say this is on the 20th. I'm just going to call it employee 1. I'm not going to set them up as an employee. I'm going to say quick add. I'm going to set it up as a vendor so we don't have to process through payroll. And then we're going to say this is going to be 14,000. And we're going to say on the other side, we don't need to mess with the items right now. All we need to do is hit a GL account. No work in process needs to be hit. So we're going to keep it on the expense side of things. And we're going to call the account factory overhead. Factory overhead. That's the one. That's it. We're going to say save and close. And you might want a memo here just because notice we don't have the payroll expense. So it's hard to know what this is doing. So this is indirect labor that you could put here and record that out. We'll put it here, save and close. Okay. Back to the trial balance. Within the trial balance, we can see that the factory overhead now is at 95. Double clicking on it, it went down, right, or back towards 0 because it should be a debit balance by the 14 to the 95, closing that back out. The other side going, of course, to the checking account. And there we have that, closing that back out. We're now at 95,000 and 68,000 for factory overhead and checking. That is the same here. So now let's take a look at the next one. If we think about 130, so now we're going to take a look at 130. We have indirect materials. So again, these are small materials. If we're thinking about like grout or something like that, or if it was an office like staples or things like that, small materials that we're going to apply to the job, nails or things. We're not going to apply them to direct because we don't know which job to apply them to. It would be too tedious possibly for us to do that. So these are going to be the smaller ones that we don't want to track to particular jobs, but want to apply the cost out in some way. Therefore, we're going to be debiting not work in process because we don't know where it should go yet, but factory overhead. The credit here is going to be going to cash. So same kind of concept here. The amount then being 30,000. So we're going to say 30,000 on the debit and credit. Same items up here. So I'm going to say factory overhead. I'm going to say F2 plus F2 to get in there. Say plus because there's something in it already. I'm going to be adding the 30,000 and the cash. F2 plus F2. Scrolling back down. Now the reason, and there's the cash. Now the reason it's nice to have memos now, because note that these transactions, you can't really tell what's going on by the name of the transaction. That's one of the problems with a job cost system. So it's nice to have notes here to tell you, oh yeah, this is factory overhead going up because we paid for materials rather than indirect labor and so on. Let's go back to QuickBooks. Same kind of concept here. We're going to go into the home page. We're going to write then a check. We're going to make the check date the 30th. So I'm going to bring this up to the 30th, and we're going to be paying this time for the materials. So we're going to take this from Staples. I'm going to say quick add, not to mix it up with Home Depot, and we're going to say vendor, and the amount is going to be for 30,000. And we're going to call this in the memo, let's say indirect materials. And I'll copy that, and then that's going to go once again into factory overhead. Factory overhead, indirect materials, and that's it. Let's save and close it. We should have a similar process that happened up on the trial balance. So back to the trial balance in the open windows, factory overhead. Now it's 65,000. Double clicking on it. There's our transaction for the 30,000. Closing that back out, we're at 38 and 65, which matches what we have here, 38. And we have the 65. Now we're going to go to the next item, which is the next item is going to be also on 130. That's going to be utilities. So if we work somewhere where we have multiple jobs we're working on in the same facility, the utilities, if we call that the factory, the utilities for the factory then should be applied to the job. Now note this is one of those types of things. It's difficult when you pay the utility bill to just say, I'm just going to divide it out by the amount of jobs or figure it out, because the utility bill doesn't happen until the end of the month typically, and the job is going on during the month. So it can be difficult for us to basically apply out the utility bill. Maybe you can do it. Maybe it's possible, because maybe we just say, hey, I'm not going to bill until after the month is over, no matter what, or something like that, and apply out the overhead in that fashion. But just note so the utilities is the next thing we're going to do. Now, again, utilities, normally you would say utilities expense. It's almost ingrained into our mind. Credit cash, utilities is an expense we would debit. But the utilities here is not being used for the current time period generation of revenue, but to make an asset, which we will later expense in the form of cost of goods sold, therefore should be going into the job. You would think work in process, but I don't know which job, therefore goes into the factory overhead. So we're going to be debiting the factory overhead. The credit then is going to be going once again to cash. So once again, same transaction, and everything looks the same because this is the dumping ground that we put all the stuff that applies to the thing we're making that we can't apply directly to a job. I can't stop putting too many zeros there. And that's not in the right cell. What is going on here? This is going to be negative that. There's our transaction. Let's record this. Same thing. I'm going to go back up top. We're going to go to the factory overhead. Something's in it, so I'm going to say F2. That's on the keyboard, plus F2 so I can move around again. Scroll back down to that 12,000. Then the credit's going to be going to cash, so I'm going to scroll back up to cash. And N4, something's in it, so I'm going to say F2 plus F2. Scroll back down, and we're going to pick up that 12,000 and enter. There we have that. Let's do the same thing in Excel. So let's go back to Excel. We're going to go to the Home tab. We're going to write another check, and we're going to say this is going to be, let's say, to Edison. We're going to say that's who our vendor that we pay the utilities to. And we're going to say vendor, this is going to be 12,000 that we're paying. Is that correct? I believe that was 12,000. Yes. And then we're going to say, all right, this is for factory utilities. Maybe IES. Is that right? Let's do that. And then I'm going to copy that. Once again, it's going to go in the factory overhead. Factory overhead. No job being applied. And we're going to say save and close. Yes. Trial balance. Factory overhead now at 53. Double clicking on it, we see that 12,000. Closing this back out, we're now at 26 and 53. Going back to Excel, we're now at the 26 and 53. That looks good. Next transaction. I'm going to have to unhide some cells to keep going. So there's some hidden cells right between F and L. I'm going to put my cursor on column E, left click, drag over to L, let go, right click the selected area, unhide. Then I'm going to go back up top. I'm going to hide the ones that we don't need anymore, hopefully. B, I'm going to put my cursor on B to F, let go, right click the selected cells and hide those cells. And so we're still on 130. And now we're going to be doing the factory rent. So the rent on the factory, if we're doing the jobs within the factory, is again something that we typically wouldn't pay till the end of the month. So we'd have to estimate possibly in some way, unless we don't bill till after the end of the month or something like that. And we're working on jobs there. So we have to apply it to the jobs in some fashion. So same thing, we're going to be increasing not rent expense because we didn't consume the rent to generate income in this time period. We consumed it in order to make stuff. And so you would think it would go into work in process, but we don't know which job we're to apply it to, therefore factory overhead. The other side then going to cash, and that's going to be for the amounts of 20,000, debit and credit. So same thing over here on QuickBooks. We're just going to go Home tab. We're going to write another check. The checks look very, very similar in format. And this is I'm going to say to the rental company, that's their generic name. That's their vendor name. That's what they call themselves. We're the rental company. And then we're going to go down and we're going to say this is also to factory overhead. And this is going to be factory rent in the memo. So factory rent. Save and close. And yes. Let's take a look at that. We're going to go back to the trial balance. Once again, now factory overhead's at 33,000. Double clicking on it. There's the 20,000. Closing that back out. We're now at cash 6,000. Factory overhead 33. That then matches the 26 and the factory overhead 53. 53, is that what I said over here? It's at 33. And it doesn't match up because I haven't recorded the transaction to Excel. So let's record it in Excel. So in Excel, I'm going to go back over here. Something's in factory overhead, double clicking on it, go into the end of it, plus go into that 20,000 and enter. Then I'm going to go to cash, double click on it, go to the end of it, plus, and then go to that 20,000 and enter. So now we're down to 6,000 and the 33. Back to QuickBooks. We're at the 6,000 and the 33. And then we have one more of these transactions. This is going to be an adjusting entry, so it's a little bit different now. We're going to say this is on 130 again. Now we're going to say we had depreciation. Now, if we do financial accounting, we've probably memorized the depreciation journal entry as depreciation expense, debit, credit, accumulated depreciation. Once again, the credit is the same, accumulated depreciation. This is the allocation of the cost of equipment over the time period it's consumed. But as we're consuming the equipment, we're not using it during that time period in order to generate revenue, but to make stuff, and therefore we should be applying them to the job. So we would put it in the work in process, you would think, but we don't know which job, and therefore the debit's going to go to the factory overhead, and we're going to have to allocate it in some way. And this is another area. It's difficult to basically allocate this out as you go, because this doesn't happen. We don't do this till the end of the month. Now, we know what it's going to be probably, but we don't typically do it till the end of the month, and therefore some estimate is often used. And so to allocate, we don't need an estimate now. We know what the actual amount is going to be at the end of the time period, but that usually happens, like I say, at the end of the month. We're working up the jobs during the month. So that amount is going to be for the 30,000. So 30,000 and credit the 30,000. So there's the debit and credit. We're going to go to the factory overhead. Something's in it. So I'm going to say F2 plus F2. There's the debit, and then that's in factory overhead, and then the accumulated depreciation is going to be the credit. Now, normally this is an adjusting entry, and normally we actually do use journal entries in order to record this. And I'm going to go back to QuickBooks and use a journal entry because there's nothing stopping us from doing that, because we don't need to basically assign it to jobs. So we're going to go to the company dropdown. We're going to go down to make journal entries. And then this is happening on, it probably should be the 31st actually. And the amount is going to be the accounts are going to be factory overhead for 20,000 or 30,000. And this is going to be an adjusting entry. And then the other side is going to go to the accumulated depreciation. And I'm just going to call this an ADJ, or adjusting journal entry. And there we go. We're going to say save and close. Yes. And okay. And then we're going to go back to the trial balance. And we see now the factory overhead is at 3,000. And there's the 3,000. And there's our last transaction. Now in this case, at this point, we've applied everything out and incurred all the costs. And we have this difference of 3,000. That's the estimate not matching the actual. We'll have to do something with that later. We won't worry about that at this time. We have the accumulated depreciation at the 183,000. There's our 30,000 transaction. We've got 3,000 factory overhead, 183 in accumulated depreciation. We've got the 3,000 in the factory overhead, and the accumulated depreciation 183. So that all lines up. Notice as we increase or incur the factory overheads, the stuff we don't know which job to hit, those are actually, more easy types of transactions, because all we need to do is we don't need to worry about the job. However, you probably want those memos because you can see how similar these transactions look, all being debited to factory overhead, and therefore you might need more detail to know exactly what is happening other than just the accounts involved in the transaction.